Hi guys, this is Hitesh and I welcome you to TradeBrains YouTube channel. If you are new to this channel, please subscribe to our channel for more interesting videos on financial topics and learning on finance. Now through this video we are trying to show how does one trade options using the Zerodha Kite platform. Now for doing that, you just open your web page and then you type Zerodha, that is in the search bar, Zerodha Kite. You get straight away the link to that. You go into the first link which is flashed there. You log in. I'm already been trading on this account, so it already shows my user ID. You just have to link in the password. And then you have to put in the PIN. Now this is a double security introduced by Zerodha, which is more for the safety of the users and traders. Now this is how the dashboard of Zerodha page looks like. It shows my equity balance here, it shows my commodity balance here. Now if you're someone who's looking to trade, say, Nifty contract or the bank Nifty contract or the option contract of particular shares of a company, so we'll be talking about each and every facet in this detail. Let's start with how do we trade Nifty options. Now first of all, we need to know where is Nifty contract trading for this current futures. How do you get that? You just type Nifty and you go for June futures, which we see here. It's trading at 10,254.895. These are live prices. Now say you're looking to buy a call option and as you are bullish from the market, so say you go for a call option of, say, Nifty, you want to buy 10,300 call option. You just type 10,300 Nifty and it shows all the different expiries for 10,300 contract, like June expiry, 11 June expiry for 10,300 contract for call option, and put option again 18th June expiry, the monthly expiry, again the next month's weekly expiries. Say if I for the sake of understanding, I take Nifty 11 June 10,300 call option, which is again shown here on the ticker tape. Now it has got various tab onto it. First is the buy tab. You can directly buy from the tab. Sell tab. This shows the various. It shows the ladder for this contract at various price level. What is the demand and supply? The demand and supply flashed here. Then it shows the chart. If I click on that, I can directly view the chart for this contract or whatever time frame I choose to. It is now it's showing 5 minutes flashing. I can choose an hourly, minutes, days, as per my convenience. And now say if I want to place an order for this, what I do is I just go to the tape again, click on a buy order. I put on a buy order and I'm looking to buy. It's right now showing the price of 78. For understanding sake, say I want to buy a limit order. Now I'll explain each and every tab in detail here also. When I say limit order means I decide the price at which I want to buy. Say I want to buy at the price of, say when this contract comes to, say, the price of 40. The premium for this contract is 40. So I put a buy order. Now this order has been placed, as you can see on the right hand side. The status update comes here, notification comes here. Now if you want to check whether the order is placed or not, you just go to the order tab here and you see this order running in the market. This is again showing the various tabs. It shows I have an option to either cancel the order from here. I can modify. What does modify do? I can modify the price which I want to enter here. Like say if I want to say, okay, I'm looking to enter, it's a price 43. This is the price I want to enter right now. So you can modify the order. The notification again comes flashed on the right hand side of the screen. Now again, say if I am saying that I have changed my mind and I don't want to take this order anymore, how do I cancel this? You just select the tab here, you cancel this order here. It's going to ask for, do you want to cancel it? Yeah, you say yes, cancel. So the order is no more in the market and the order has been cancelled. You can see the status here, cancelled. Now let us understand what are the different other ways of buying it. Again, you go to the buy scale. You have an option to directly buy at the market price. Now it won't show the price here. When you click on the market, it will just buy at the price which is shown here in the circle in the yellow which you see here. If I put a buy order here, it will directly place an order in the market. I'm not going to do that. I'm just saying if you want to buy right at the market price, you just hit the buy button. It places the order in the market. If you want to see that, how do we do similarly for buying a put option also? Say if I'm looking to buy a Nifty put option of, say, 10,200. I have a bearish view in the market. I feel the market might come down. Again, if I choose Nifty 10,200, it shows prices for each and every expiry for both call option and put option. If you scroll down the menu, say I want to buy a put option. Put option is PE, and I want to buy, say, 11 June expiry. So I take this and select this. Now this ticker tape is shown here. You can see the bid and option. Why is it showing red? Because the market's been in green today, and which is where the option premium has come down for it. So if I want to say place an order for the same, you go in the buy tab. Again, you choose either a market, limit. So I say lose a limit, and I want to see a 42. If when the price comes to 42, I want to buy this contract. I place an order. You again go to the order book. You see here the order is running right now. It's an open order. You can see the status open. Similarly, if I want to say you want to cancel this, you directly select the tab here. You cancel the order, and the order is cancelled. You can see the status for, we have placed 2 orders today. We have cancelled both of them. You can see it from the it becomes a part of executed order because the order was placed and the execution has been done. The execution is in the form of cancelling the order. Now take for example, I'll show you an example of similarly for the Bank Nifty. A lot of our viewers have been asking how do we trade Bank Nifty options. It's very simple here. You just go type Bank Nifty. You get the Bank Nifty June futures contract here. You can see again the price that is trading right now is trading at 21,410 approximately. Now say I again have a bullish view on the market, and I am saying that I want to buy a Nifty call option for say Nifty 22,000. I want to buy a call option. Now I again choose, there are different levels of expiry available, monthly expiry and the weekly expiry. I choose the closest one and I go to Nifty call option of 22,000. You can see it's trading at 207. Like the price for buying one contract of Nifty call option of 22,000 is 205 rupees, 205 units, and each unit is worth 20 rupees in Bank Nifty, which means if I were to buy this contract, I would need about 4,000 and a little more money in my trading account. Now say if I'm saying that I'm expecting a little more bullishness in the market, so I go for a higher contract. Say if I'm saying I want to buy a Bank Nifty 22,300 call option for the nearest expiry. I choose that again. Its premium right now is 132. So I'm saying okay, I expect bullishness in this contract. I want to execute this order. So again I go to buy tab. I have option either to go limit order. Limit gives me the option to choose the price I want to place the order. Say I want to buy when the price comes to 100. I put a buy order, and if you want to go and see the order book right now, the order is placed. It's showing its trading price and showing the price which I want to buy at. LTP is the last traded price, and price is the level at which I want to buy, and the order is open in the market right now. Now a lot of you must be thinking that I haven't shown exactly what happens once the order is executed. So what I'll do is I'll cancel this order for now, and I'll show you if I were to execute a Nifty Bank Nifty contract for buying at the current price. So I just directly go to buy tab, put on the market order. So once I click on the buy button, it will exactly buy at the current market price. Say if I do that now. Now I have, if you see the notification here, it shows the order is complete, buying Bank Nifty of this contract at 130.1. It bought me at the best offer in the market right now. Now if you look at my position tab, it will show you what my order is, what price I bought, what is the current trade price, and what is my P&L status for this order. You can see it from here. Now how do I manage the order? Now if I'm taking an order, it's always advisable to have first of all stop loss in mind. Now if I am saying that this order is in the market, I don't want to take too much risk in the market. I want to put a stop loss for this. So how do you do it? You go on this like options, you go on the exit options. You have either option to exit at the market price rightly, you can sell it, or you put a stop loss. Stop loss can be a limit stop loss and a market stop loss. What the difference is? A limit stop loss, you specify the range within which only if the order comes, it has to be executed. Say if I'm saying the trigger price for this order is 100 and the price at which I want to exit is say 100 only. I don't want to exit at any other price. I put an order in the market. The order is set in the order book. You can see there's a trigger pending for this order. This is one way to put a stop loss. The other way is if I again go to my position and I want to put it, I click on the exit tab. I again put a stop loss market. Now what market does is, as in when the order comes to say I want to put a stop loss at the market price of 100, as in when the price comes to 100, it will just hit the order in the market. It wouldn't matter where it hits. It could hit at 95, it could hit at 90, it could hit 99 also. And if there's too much of selling and there's a sudden spike, it can execute 80 also. So the difference between two is that if a limit order is not executed at the price I specify, the order hangs in the market. But a market order just hits the market and exits the position. So it is always advisable for high frequency movement of products, always to put a stop loss market, and for lower frequency products to put a limit market, because you know that I will eventually get my price. So now if I'll show you how to put an order, stop loss market, I put a trigger price and I put a sell order. So if you see in the order book, the order is there. Once the price goes to 100, it will directly exit from the market. So that's the two difference between the limit order and the market order. So that I hope that clears our doubt about how to put an order in the market. I'll show you how to trade options for various stocks and various shares in the stock market. Say I take the example of Reliance Industries. I want to trade Reliance options. First of all, I select the Reliance contract. It's right now trading at 1575. Now I'm saying we have to understand that Bank Nifty and Nifty are the two indexes which have weekly contracts and monthly contracts, whereas the shares of the company have only monthly contracts. They don't have weekly contracts. So, and they have 3 monthly contracts. Now I'm saying that I am little bullish on the Reliance, and at the end of the month I see the price of Reliance going above 1600 or 1620. So what I do, I select the Reliance. I type on the tape here Reliance. Sorry for the spelling errors. Reliance. I already have this thing tab on the thing. Then I choose Reliance 1600 contract. Reliance 1600 call option. So you see there are 3 expiries: June, July and August. We have both call and put option. Say I'm looking to buy a contract, so I select this. So the price for one contract of Reliance is 42.50, and you can see each and every contract of Reliance has 505 shares worth of contracts. So if I were to buy one contract of Reliance at current price, I just go to either place limit order and market order. As I explained, limit gives you the price you want to buy it. Market tells you exactly you can hit the market right now. So how much margin is required here? If I were to buy at the market, I would need to calculate 42, which is the current price, multiplied by the number of shares in one contract, which is 505. So I'll need a margin of roughly around 20,000 to buy one contract of Reliance by hitting the market right now. That's the way to buy a contract for shares of the company. So in this video, I've already shown you how to buy Nifty contract for various option levels at different expiries. For Bank Nifty, I've shown for both weekly and monthly expiries. And for the shares of the company, there's only monthly contracts in options. I hope we got a clear bifurcation between all the 3 different kind of contracts. If you have any more doubts regarding trading options or different kind of options, TradeBrains is launching its new elementary courses on how to trade options for beginners and for intermediate learners. If you want to know more about it, you can go to tradebrainsacademy.com and find details about it. I'll be again posting the link of description for the same along with this video. Thank you for watching the video, and please do comment, subscribe and like our channel. Thank you so much.